You've got your product idea. You've got your name. Maybe you even have your first batch already created and you're ready to get out there and start selling your CPG brand. But before you sell a single unit, you need to decide what kind of business you actually are. We got to make sure we take care of that paperwork. Are you an LLC, S-Corp, or a sole proprietor? Because if you pick the wrong one, you could end up paying thousands of dollars more in taxes or expose yourself to personal liability later on down the road. In today's episode, I will be breaking it all down step by step like I usually do, so you know exactly how to set up your CPG business the smart way and the efficient way so you can get the best out of it for your long-term growth. Of course, it's me, your boy, Mr. CPG 101, where I help all CPG founders when it comes to tips, strategies, and ideas, and I help you take your beverage, snack, beauty brand, or any type of business to the next level. Your legal structure matters more than you think. Some people just think, I just signed up and I'm good to go. But it doesn't work like that. It matters when it comes to taxes, funding liability. It even matters when it comes to your co-packing agreement and you're dealing with third-party sources. So let's simplify the chaos and figure out which setup is right for you. Why the business structure matters. Yes, your business structure determines the following things: how you pay taxes, right? How you get paid as the founder. If you're going to be taking a salary, I would suggest waiting later on. How investors or partners join if they want to invest in your business. And God forbid, something goes wrong, how are you protected? In CPG, your brand isn't just a logo, it's a liability shield. If you get this wrong, your personal assets, like your house, cars, and everything else, could be on the line for any problems you get into. Remember this, you gotta make sure you have your business structured correctly and you're doing business the right way. Step 1, understanding sole proprietorship. And what this means is a sole proprietorship is the simplest way to get started. You just start selling, and you start selling under your name or doing business as, which is a DBA. What's the pros of this? It's fast, cheap, and easy to start. No state filing required. You just get out there and you start going. Of course, you report everything on your personal taxes, or your personal tax return, I should say. But the cons of this is you have no liability protection. None at all. It's harder to get investors or co-packers because you're doing everything under yourself. And it's just something that doesn't protect you as well. If you're just testing your idea at a farmer's market or online, fine. I would say this will be quick. But the moment you start scaling, you will need to level up and change how you're doing business. Step 2, the LLC, a limited liability company. An LLC is the go-to structure for most new CPG founders. Everybody is an LLC in some shape or form. So what does it mean for your business? Your business becomes its own legal entity. It's separate from you, just in case anything happens. And what are the pros for this, since it's separate for you? You have limited liability protection, which is always good. It's simple to manage, which is always a plus. And also tax flexibility. You can elect to be an S-Corp later, and you just have to file it in the state that you're going to be doing business. So what are the cons? Self-employment tax on profits, and some states charge annual fees. Yeah, like Mississippi, Texas, and a lot of other ones, they charge annual fees for your LLC. But hey, that's the price of doing business. If you're producing, selling, or signing to a co-packer agreement, an LLC is the minimum that you will need to make sure to get this party on the road and get your business going to the next level. Step 3, S-Corp or the S-Corporation. When you're scaling up and you're growing your business, this is something a lot of businesses think about, because once you're making consistent revenue, usually between the 50K to 100K plus in profit, you should consider electing the S-Corp status for your business. Because an S-Corp isn't a new company. Of course it's not. It's a tax election that helps you save money and keep your money. What are the benefits? The benefits are you get to pay yourself a salary and take profit. Another benefit is you avoid self-employment tax on full profits. This is another thing that a lot of people want to avoid. And then lastly, you're professional for investors. If an investor wants to invest, they'll see your S-Corp and they know you're about business. What are the downfalls? You're going to need a bookkeeper to keep up with your books. You're going to have to pay a reasonable salary to yourself so that you can get the benefits. And of course, you're going to need an accountant to make sure everything's in order. If anybody wants to look at your books and make sure everything's going good, everything lined up and it's taken care of. Just remember, when you think S-Corp, think about your business is growing, your business is becoming profitable, and you want to scale it. That's what you have to think about when you think about S-Corp. I'm growing, I'm profitable, ding, let's go get a S-Corp. Step 4, how to legally form each structure so you can be official like a whistle. Here's how you make everything official when it comes to your business. Number 1, choose your business name and check availability. Of course, in your state, online, all that. Number 2, register your business with your state. That's what you got to do. You're in Texas, Mississippi, you got to do all that. Number 3, you got to get an EIN number. It's an employee identification number, and you get it from the IRS.gov. Number 4, open up a business bank account. Number 5, file for any required licenses that you may need, or you can come back to. Number 6, get insurance for your product, usually general liability, so you can protect yourself. Because if you're serious about retail, insurance and registrations are non-negotiable. You got to make sure that you get it for the right cause and what you're doing. Now, in the beginning, will you need insurance? It all depends on what you're doing. If you're selling at the farmer's market, I would say sometimes people get out there with no insurance, but as you start progressing on and selling, it will be good to get it, because if you don't label your product correctly and someone drinks it or gets sick from allergies or anything like that, they can't sue you because you didn't label your product correctly. As you go on, make sure you do get insurance. And it's also good to label your products correctly so that people know, just in case something was to happen. Step 5, taxes and paying yourself. Something that you can never avoid is taxes. Here's how taxes break down for each structure. When it comes to a sole proprietor, you pay income plus self-employment tax on profits. When it comes to LLCs, it's the same as above unless you elect to be an S-Corp. But if you're an S-Corp, you split salary, W-2s, and owner distributions when it comes to paying taxes, when it comes to paying your taxes. Translation, pay yourself fairly, save receipts, and hire a CPA early. It'll save you a headache and audits in the long run. Just remember that. Step 6, protect your brand early. Yes, when you're ready to launch and get out there and you have everything decided on what your colors and your name will be, you need to do the following things. You need to file a trademark for your brand name or your logo, whatever it may be. You need to, number 2, secure your domain and your social media handles. You don't want to jump out there and then all of a sudden someone takes your handles because you didn't take care of that first. You got to register your UPCs via the gs1.org. And then you also need to get product liability insurance so that your CPG brand is taken care of just in case something happens. You can't build a brand if someone else owns your name. Point blank. You cannot build a brand. Or if a claim wipes out your savings, because people will take you to court and put on cease and desist on you. You got to make sure you remember to take care of all your business in the beginning before you just jump out there. Because some people jump out there with a brand name, not knowing that that brand name's already been trademarked and they can't use it. Then now they've had this whole full rollout of this name, liking this name, only to find out that this name's already been trademarked and I can't use it. Now you got to go back to the lab and figure out a new name to use and define, because you can't use this name and now you're getting hit with a cease and desist. Let's recap everything. Let's recap everything we learned today and give you a quick recap. Sole proprietorship equals cheap, no protection. Best for testing out your product and getting out there. LLC, best for startups, protects assets, and it's simple to get. S-Corp is best for scaling, saves on taxes, but it adds more paperwork. You have to be prepared for that. There's no one size that fits all when it comes to starting your CPG brand. But remember, everyone starts with an LLC and then they slowly graduate to an S-Corp when they become more profitable. Take your time, make sure you pick out the right one for you. I would say an LLC first and then go from there. Lastly, before you launch your CPG brand, pick the structure that fits your stage. Like I just said, I feel like every stage, an LLC works well, and then as you grow, go to S-Corp. Because what it would do, it help you protect your time, money, and your brand from day one. That's why I always would suggest the LLC. I always keep saying LLC in the beginning, and then as you grow, as you get more sales, then you go up to the S-Corp when you have more people on board with the business and you're able to pay more people to help out with the company. This has been another CPG one-on-one with your boy Eric. And if this video helped you in any shape, way, or form, please hit the like and subscribe button below. And also comment below which business structure you're using. Are you using LLC, sole proprietorship? Are you in the S-Corp stage? Which one are you in? Please leave a comment below so you can share any kind of advice you can with other CPG founders. Because like I said, this is just a community and we're all here to help each other. Thank you for tuning in. Please continue to share the videos with other CPG up-and-coming founders or other CPG founders in the space. Please remember, CPG 101 is about helping all our CPG founders when it comes to strategy, tips, and just giving them good advice so that they can take their business to the next level. That's all what CPG 101 is about. Please remember that, and I want to say thank you for tuning in to another episode with me, Eric.